Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Saturday, and it's Saturday evening. We're about 6:15 p.m. Central Time on March 27th, 2021. We're coming to the end of the month very quickly, aren't we? Look at the rally you had on Friday. What a son of a gun that was. Pretty powerful, right? It's very interesting on the daily charts and the weekly. For those of you that are my morning subscribers, you know you got your weekend edition where I cover all the charts. I do have to be honest with people in these. I've cut back a few of the charts in these. I'm finding too many people will write me, you know, I can get enough out of your end of the day free on YouTube, so why am I subscribing? Well, that means I'm putting too much up here. So I did listen, and I thank you. And I want to remind you, it's late at night Saturday, obviously, for a lot of you that are going to see this, but we're finishing up our online enhanced Bollinger Band course. I've done all the intros now. We're there. So we're going to do a release this week. And remember, I offer a discount on it. Basically, if you take a look at the intro price, if you're buying coming into my morning subscriber videos, it's $7.95 on the futures, and I'm giving a $15 discount off the price of the online course. So it's a no-brainer for you to become a subscriber. And that goes to every paid subscriber will get a $15 discount. The gold market, the silver market giving a bounce as well. But let's get into what's going on. The Suez Canal situation has not changed. COVID situation has not changed, except suddenly the antennae are coming up. You know, if you watch the news and you look at what's going on in South Beach, California, parts of Texas, the kids are on vacation and they're partying that they do every year. You're not going to stop them. But as I look at it, and I do look at it, I used to live, literally as they're showing Ocean Drive, I lived a block away. Right in the Art Deco district. I'd walk to the beach. Versace's home was about, I'm going to say, a block and a half from where I lived. And I had the top of a building there. To make a long story short, very long story, that has been closed down, which is, I've never seen, all right? And I have been there a long time. I mean, a long time. I live in Chicago, but we kept a place there as well. But then I'm one of the older guys down there, that I wasn't comfortable with that. So you play with those things, but you understand those kids are coming back on airplanes, cars, they're going back to schools, they're going to be with their parents as we're getting into Easter now and all. What do you think they're bringing home? That's what the fear is, and you got to be careful. We're probably going to get more cases out of this. Europe's got the same situation, only worse. As you know, COVID is rampant. Poland, the Czech Republic, Germany now, France, and they're starting to say between the borders, you need to show that you've had a vaccine and possibly a lot of testing. Testing is the most common thing now, saying that you have a negative test and it just happened, that test. Otherwise, you're not getting into some of the countries. You think we're not going to have cards in America that we carry eventually? You'd be foolish. We're going to have what's called a vaccine card. There's a lot of people that don't want to get it. They're entitled to not get it. They might not be able to go into certain establishments, though. So you get this going up. Look at that monthly thing. I mean, just take a look. 2020, you started off at the, let's call it 2,600 level. You're at 3,964. So it's taken a while, but you've done pretty good as this market has gone crazy over the past year. Do I think you'll continue to gain that much year after year? I doubt it, but you know, you never know what's going to happen here because all the news is going to be good soon. And that's because we are getting COVID in America under control. They're going to have 200 million doses available now. A lot of people getting their vaccines. 25, what do they say? Something like 2,500, 25, is it 25,000 a day? Oh no, 2.5 million a day. I'm just teasing with you. Think how many people that is every day that you're getting these vaccines. So it's big numbers that are going up here. So as you can see how the market, it just keeps going up, right? Now, are we in a resistance point? You are. You started a consolidation, but it's a mini consolidation. If you pop through this high and can stay over it, that's last week's high, and that was 39.8875, what do? Well, I'll show you. You keep the pattern of higher lows, higher highs going, that's number one. When I look at moving averages, have I not told you that I believe that this 18-week average is the line in the sand? I believe it on daily charts and on this chart. You pull back to it often, And that's where the game ends in the market. If it's in an uptrend, it says, okay, I had my correction, I'm ready to move up. So what stops the market? Well, often it's the upper Bollinger Band. You can see that. Very often. How often do you stay over the Bollinger Band? Only 5% of the time. So markets get up there, they might push a little bit on it, and then they fall back under it, and you get your chances. That's why I'm teaching the enhanced online Bollinger Band course, and it'll be out this week. I tie it together with momentum, and momentum in this chart is embedded. So I have the most bullish of the momentum readings. It's just locked in until the red line closes under 79. I keep finding support against this number. If you didn't come in at those numbers, too late. The market's higher. The resistance, let's call it the 4,005, 4,006 level. What about the NASDAQ? Different story. I kept this on for you because I wanted you to see lower highs, lower lows. But it joins the bull parade if you can get up and over 13,298. That, as long as you don't get back through this low right here, could give you higher lows, higher highs. So where do you think the market's making it stand? Look at that 18-week average. Tell me you're not playing at it. That line in the sand, as I call it. If you take that out, wherever the upper Bollinger Band comes in, I'd look for the resistance in the market. But it's a Johnny-come-lately if it joins the party. Now, in the 30-year bonds, this is the back end of the curve yield. Has anybody said the Fed's going to defend this? Anybody hearing that? No way. So this continues to run that Bollinger Band with an embedded reading. Now, you're going to get a bounce. It always happens. Don't know when, but it'll bounce away. You know, you were doing that here. You get your bounces, but I don't see that as a change of trend. If you get a bear market rally, means you try to get this and get a rally, okay. But you've had a bearish crossover in this chart. Do you see this? Here you got the 18-week average under the 100, and you're getting your follow-through. Will you get bounces? Of course. But until this number, the red number, closes over 21, I don't see that strong of a rally coming. 10-year note, the same thing. I've got the embedded reading. That's what the market's done. The market at first came down, played at the 100-week average after it got under the Bollinger Band. Then it let go. So what do you think on the way up? I would say wherever that number comes in will be your resistance. Now, be careful here. You could get another crossover in the next month, month and a half. You know, it would take a while to make that happen. But then you get under there. That would not be a bullish sign. That would be another potential bearish sign in the market. So you're still looking weak, embedded reading, trend down. Dollar index. Higher lows, higher highs, uptrend. The dollar is winning by default. I have written about it in my newsletters that my subscribers see. I've talked about it here. I've talked about it on TV galore. And one of the things that I keep saying is we are winning because of the COVID battle. We are winning because we're allowing interest rates to go up. Europe can spend all the money it wants on fighting their COVID relief and giving it to people. But as long as COVID isn't coming under control, it's money that is not wisely spent. Get COVID under control, spend the money, and then I think you see this happen, because they're going to keep their interest rates lower than the U.S. And the market will say they're undervalued in different things, blah, blah, blah. And you get those plays as they have to eventually catch up. The dollar on its own inertia will find a number that is too high for interest rates and starts choking the economy. We don't know what that number is. There's lots of guesses, and the Fed's not worried about it at all. They've got their foot on one thing. They've got to step down on the short-term rates. They're keeping them low. They want to see inflation grab hold. They're still watching the COVID situation, and their other mandate is employment. And that is their two mandates. The rest of it's the Treasury Department, not the Fed. In the eurocurrency, back down to the lower Bollinger Band. This is what we're talking about. The market is saying you have a problem. And that's where it's at. It's not Christine Lagarde. It's not